The Central Bank of Kenya has lowered its benchmark lending rate in a move aimed at stimulating economic activity and boosting private sector credit. The Monetary Policy Committee cut the central bank rate by 25 basis points to 8.75%, citing easing inflation, improving credit growth, and a stable macroeconomic environment. The decision comes ahead of Wednesday's MPC briefing, with the regulator signaling continued support for growth while keeping inflation firmly anchored.
The latest policy rate cut extends to a rate easing cycle that began in October 2025 as the Central Bank of Kenya seeks to lower borrowing costs and stimulate private sector activity. The regulator says inflation remains well contained, easing to 4.4% in January, supported by lower food prices and stable energy costs. Economic growth has remained resilient, with the economy expanding by 4.9% in the third quarter of 2025, driven by a recovery in industry and steady performance in the services sector. The central bank has also adjusted its policy framework to improve how rate cuts are passed on to borrowers, narrowing the interest rate corridor around the policy rate. This is expected to strengthen the transmission of monetary policy to lending rates. The central bank says the rate cut will support lending and economic activity while keeping inflation and the exchange rate stable, with the next policy decision expected in April. Ndutamo Kami for Prime Edition.